Well, folks, we finally got a producer this week reporting positive earnings. Extremely positive. Record revenue for the fourth consecutive quarter positive. And on top of that, they actually managed to meet guidance, which seems like it might be a bit of a low bar. But based on results released by other operators so far this week, well, it's not. Of course, we're talking about Alamos Gold. Let's dive in. Alamos Gold is one of the few producers whose income statement seems to have materially improved from the rising price of gold. Or maybe we just finished looking at a bad set of financials before tending to Alamos. Anyways, Alamos reported for the fourth quarter operating revenues of $376 million, a 48% bump compared to the $255 million reported for the fourth quarter of 2023. Obviously, a key reason behind this is the bump in the average realized price of gold, which climbed from 1974 to 26.32 an ounce. Earnings from operations more than doubled in Q4, hitting $158 million versus $72 million last year, while net earnings grew from $47 million or 12 cents per share to $88 million or 21 cents per share. On an adjusted basis, Alamos reported net earnings of $103 million or 25 cents per share versus $49 million or 12 cents per share in the year-ago period. Cash provided by operating activities in the fourth quarter, meanwhile, grew from $124 million to $192, while free cash flow jumped from $14 million to $54. For the full fiscal year, revenue improved by 32%, climbing from $1 billion to $1.35, with the average realized price per gold rising from $19.44 an ounce to $23.79. Earnings from operations moved from $318 million in 2023 to $562 in 2024, while net earnings improved from $210 million or 53 cents per share to $284 million or 70 cents per share. On an adjusted basis, earnings improved from $208 million or 53 cents a share to $329 million or 81 cents a share. Cash from operating activities improved from $773 million to $661, a new record for the company, while free cash flow doubled year over year, jumping from $124 million last year to $272 million this year. Alamos Gold ended the year with cash and cash equivalents of $327 million, while liquidity sits at $827. $250 million remains outstanding on a credit facility as a result of debt settlements related to the acquisition of Argonaut Gold in 2024. However, the company is currently in a net cash position overall. This, of course, is after the issuance of $41 million in dividends for 2024, with the quarterly dividend sitting at 2.5 cents per share. Okay, let's move on to the production data. The fourth quarter saw Alamos produce 140,000 ounces of gold, as compared to 130,000 ounces in the fourth quarter of 2023. A direct comparison isn't exactly fair here, as 2024 saw the addition of Argonaut Gold's Magino mine to the production mix, which in the fourth quarter produced 16,000 ounces. So excluding that new asset, production was slightly down year over year, but that doesn't really matter. Production in the fourth quarter came in at total cash costs of $981 an ounce, which was an increase over the $900 an ounce recorded in the year-ago period. All-in sustaining costs likewise grew, growing from $12.33 an ounce to $13.33. For the full fiscal year, gold production hit 567,000 ounces, as compared to 529,000 in 2023. The figure represents a record level of production for Alamos, while also approaching the midpoint of revised improved guidance for production. Guidance had called for 550 to 590,000 ounces of gold production this year, up from the initial guidance of 510 to 540,000. Cash costs were up on a year-over-year basis, climbing from $850 to $927 an ounce, while still falling within the guidance range of $890 to $940 an ounce. All-in sustaining costs also rose, moving from $11.60 an ounce last year to $12.81 an ounce in 2024. Guidance had called for AISC to come in between $12.50 to $13.00. On a mine-by-mine basis, Hyland Gold hit the upper range of guidance, while Mulatto's blew guidance out of the water, exceeding the upper range by 10,000 ounces of production. Young-Davidson and the newly acquired Magino mine, however, fell short of expectations. One area that Alamos is also setting itself apart from peers from this week is their outlook. The company is currently calling for substantial growth to their production profile, with projects set to come online over the next few years that will materially change their level of production. For 2025, Alamos is calling for production of between 580 to 630,000 ounces, which on a midpoint basis would represent 7% growth on a year-over-year basis. By 2027, production is expected to be in a range of 680 to 730,000 ounces. Well, the Lynn Lake project, with initial production expected to commence in the first half of 2028, is expected to push consolidated production levels to around 900,000 ounces annually by the end of this decade. Cash costs in 2025 are expected to come in at a range of $875 to $925 an ounce, reflecting a year-on-year decline, while all-in sustaining costs are to come in between $1,250 to $1,300 an ounce. Total sustaining and growth capital is earmarked to be within a range of $560 to $630 million, the majority of which is attributed to growth capital at the Hyland Gold Project, while exploration expenditures are estimated to be in the area of $39 million for 2025. All right, so let's wrap it up. Look, it was a good quarter for Alamos Gold, and their outlook for 2025 is looking even better before factoring in the financial bump that the current gold price environment will provide to the company. Now all they have to do is continue to execute. All right, everybody, we are basically covering gold companies, it looks like, this earnings season, but we're getting lots of engagement from you guys, so that makes us want to keep covering it. If there's names you want us to cover, let us know in the comments section. Also, if you have any thoughts on these earnings, please put them in the comments section. All right, everybody, thank you for watching.